I wish to express my gratitude to Aapresid for having invited me to participate in this Congress. Our goal is to continue with the analysis of last year's context. I had the opportunity of being a listener in different conferences, and what was discussed became a reality during the year. I am a farmer as well as an economist. And my goal was to share with you the concerns that a farmer may have so that we may improve the relationship between banking and farmers. So, Juan, we kindly invite you to get started with an analysis of the context. The goal is to take a look at the macroeconomic context and the forecast for the rest of the year. We will touch upon sustainability and explore potential compatibility between the financial sector so that agricultural systems may become more sustainable. And another point that I would like to discuss is how digital media and new technologies can bring farmers closer together. Same thing for agricultural businesses and banking, how credit conditions may be improved. Juan, let's get started talking about the context. What you mentioned, Federico, is very important. I think that it's important to talk about how the context is doing today vis-a-vis what we were discussing last year. We are coming from a transition, and if I had to talk about how we are doing today, we have an interesting opportunity as a country, and this is related to our opportunities as a financial system. So I think that we come from a transition, a reorganization of the economy. This is a positive thing, because a more organized economy helps loans. And this is happening because when we take a look at market indicators, loans in the country are growing. We were coming from a very low indicator. Argentina was below 8% of loans over GDP. So this proportion in the agricultural world is very similar, independently from the fact that this is a very specific sector that requires quite a bit of loans. But I think that this reorganization of microeconomics led to an expansion of the sector. So even though today the values are higher than last year's, so right now we are closer to 10-11%. We have still not recovered the historical average. We mentioned this last year. Argentina attained a natural average of loans over GDP during more organized economic periods that was close to 20%. So if we take a look at nowadays vis-a-vis the opportunity that we have with regard to recovering our historical value, well, we need to restore the financial system. Then we may talk about financial opportunities in our business, of course. So let us take a look at the average of the region. It's above 50% of the GDP. This is loans over GDP. So recovering our to recover our average and stay and be up to speed with our neighboring countries, we need quite a bit of work. In the past, the market was highly pacified. It was highly influenced by the peso, and well, you know that it was necessary to reorganize the strategy and becomes very efficient. So this exposure to financial assets is something that is not happening this year. We are moving towards efficiency. So we were moving from a highly pacified market, and loans became dollarized gradually. This is a very basic simplification. This is something we mentioned last year, but we are intermediary between liquidity surplus and liquidity scarcity. So what do we lend as part of loans? It's deposits. So there is a big opportunity for Argentina to recover its deposit average as well, historically. So that is quite promising as well. We need to remember that in the past, the cost of opportunity of money was equal to X. Right now, I'm focusing on dollarized financing, which is growing much more than peso-based financing. But this opportunity cost changed dramatically. What I want to say here is that we need to be very efficient and we need to plan credit very well, because we went from 2024, where the cost of indebtedness was below 5% for financing a campaign. Now the context has changed altogether. Why is this happening? Well, because banks are competing for deposits. So this is in order to incentivize liquidity. And also, if you take a look at companies in this sector that is out for liquidity, the cost changed dramatically between 2024 and 2025. So we have moved from a highly pacified market, where the goal was to capture some kind of value, but now we do not see that. What we do see is a big opportunity, but with a lot of warning signs in the market. That is, capital and liquidity will not last forever. So I think maybe my colleagues have something to chip in. Moving forward, we have this big challenge. This industry still has a lot of room for growth. And if we take a look at the agricultural sector, it's $15 billion that are invested annually. Banks account for 1/3. Now it's grown slightly more, so there's a lot of room for growth. I think that what should be mentioned is opportunity cost for money, and why are banks in this situation nowadays? What is going on moving forward with loans? What has been happening between 2024 and 25, when we were sitting in this very same panel last year, we had already started to loan dollars at rates that were different from market rates. As the economy opened up, this became more normalized, and now we are in this situation. As well, there was a significant growth of demand for credit versus deposits. This increased rates. Of course, we started to compete by trying to capture those deposits, and the need to normalize this, to arrive at this historical average, is that the system needs to grow entirely across the board. That is to say, deposits need to grow in order for us to be able to loan more. And this is tightly related with trust, with a market that should have the necessary opportunities to enable liquidity in the financial markets, so that will nourish our loan capacity vis-a-vis companies. To add to what the two colleagues have just said, the word that is in this year is efficiency. Production-related efficiency in our case as well. The business model has changed significantly, but we also need to pay attention to the opportunities that may come up in the market. Hernán was talking about the dollar rate and how it's changed over the past few months, but as well, there are new alternatives coming up that allows farmers to get financed at convenient rates. In the past, financing was an opportunity and the real rates were negative, thinking about inflation for pacified loans or thinking about dollar loans. Now the price of financing exists as a real thing, and it needs to be added as an additional input when you calculate your potential bottom line. But my suggestion is we should always pay attention to opportunities that may come up through companies that may be willing to subsidize this cost or anything else that the banks may have to contribute. Also, the reality of the sector, the perspectives are positive for many indicators. Oftentimes, a business depends on how financing gets materialized. The financial tools are there, and business opportunities should be seized, like embracing new businesses or buying new tools or new technology. Thanks to a loan, that is an opportunity that should not be disregarded. All those in this panel represent commercial banking, so we are passionate about making business and granting loans. I cannot help but recall the first quarter of this year, Expo Agro, and well, there were lots of loans that were granted. There was an 88% growth for loans in the first quarter, 2024-2025. After the dollar was released or freed up, it became more fluid as well. So we really have to be attentive to opportunities. Maybe you need to check your figures. Maybe you need to add a little bit more than 30% of own capital for the next campaign. But well, the loans will be there, but you need to make sure that you will be able to honor those loans. Well, you mentioned the word efficiency, and this goes hand in hand with banks. It happens in the countryside, in farming as well. The access of new technologies as applied to processes and so on, that goes hand in hand with banking. What's your view on the demand side for investments that will improve the productivity of farming as a whole? And how do you see demand moving forward? And also with the funding of the new campaign, where do you see your focus for the funding with regard to the funding of inputs for the campaign? Or do you think that there is going to be a more longer term financing for farmers? The loans that we see as more present are the capital work loans. If we take a look at loan volumes and how they are being used, most of it is being used for working capital. Farming is a big source of traction, and you can see, like, for example, for portfolios are more dollar-oriented than peso-oriented, and also investments in capital goods. That's something that people try to find. There's always a window of opportunity where the ratio between financing and the capital goods that you're buying is just the right one. Although there's been some growth and there are periods in which investments were not made and now you need to make those investments, for now the impression is that the value of the asset that you're going to invest in is very high, and that is why people are always attentive to window of opportunities and the needs that they need to cover for. Now, technology is a big source of traction. One activity that has a very good product capital good investment ratio is dairy farming. So there is a very good relationship versus the assets that need to be invested in, and there is significant investment in technology going on nowadays, and there is significant demand for technology investment. There are 2 dairy farms that have made significant investments, but also talking about dairy farming, there is a need for greater efficiency as well to improve production results. So clearly financing plays a role. If loans were longer term and the conditions were better, well, it depends on what we discussed before. We are not magicians right here, but there would be much more because the demand exists, and I think that the same can be said about machinery-based loans. So, and with regard to campaign loans or financing, that has been growing in the past campaign, and this year we are seeing that there is greater credit that is being granted for campaigns as well. Input stocks that had been carried over from past years have been used up. So, So this campaign needs to be considered entirely in its entirety, and we can see that more loans are being granted for this campaign.
Very briefly, from the point of view of recommendations, the variable to make an adjustment in the decision, if it's you make an adjustment in rate, then the cost of fundings will be affected. So we are not seeing big changes as in the past. I think this stabilized context gave us what we expected. We do not have to wait to take a decision. You are not speculating with change of rates. I do not see a disruptive change in rates in the future. I think we should be focused on the productive business than the rates variable that should add value. I think in the case of inputs, farmers understood that the financial system can offer something that is reasonable for their business. And somehow this is given, and we have to improve this value proposition more and more. And we celebrate that after each meeting with our clients, they are all thinking on how to make their processes more efficient. And that is probably investment in technology. In that case, perhaps we have to think of the financial terms or of loans, and I'm sure with that the industry will improve. We got used to the financing of farming machinery was given with different types of support, but we see that the dairy industry is quite thriving, and if we're going to evaluate funding as per rates, we are going to miss businesses where funding can leverage a better business, or we are going to focus or miss the focus on the sustainability of the business. I think that the credit offer is there, but the taker takes finances for a short term. Investment is more conceived in terms of the technical aspect, but rates are going to be always positive with reference to the inflation, so we will do the maths again, and we will seek efficiency and sustainability if we are going to invest or not with those machines. Technologically speaking, the farming sector has always been one step ahead in the region. We have to get passionate about investment and to grab the opportunity where it comes. We see that the variable rate is something difficult, and a fixed rate is always what people want. And a variable rate is part of the products we offer, and it's difficult to convince people. They have to change their mindset. Connecting to the dairy sector, I have a question in terms of credit to agri-products. I understand that the dairy sector is the opening sector. To the agricultural and livestock farmer could mean an important change. Is there a perspective to provide products on future harvests connected to the use of new technologies? How is the financial sector helping farmers? Let's clarify a little bit what you are proposing, because the credit that has been proposed are in UVA rates. Values according to products is relative. We need to have the counterpart to move along the same lines. If I had to give a loan in terms of dairy products or beef, I should have that liquidity on that regard. What we do have is the UVA credits. We've had credits in mortgage credits, UVA credits for mortgage credits, and we did not have enough liquidity to offer it to companies because they have other taxes involved, and it makes it more expensive. So the credit becomes a new VA type of credit. And when you read the small print, it depends on the product, but you pay the same amount of milk or beef in terms of your monthly payment. But if the product increase, you will have more credit, or it will get more extended in time. So your payment will be the same in terms of kilograms of beef, for example. You might pay less because it performed better. So the certainty of the payment you will make depends or is connected to the product, and it's a small niche. We did not see much of volume there, but it's. But I hope we can offer that. What's necessary is to have the product to offer and to convert it in that index. To mention also another example, and it's a direct correlation to the price of milk, so it was easier. In the case of beef, it's more complex. But I take what Province Bank says, Banco Provincia says. Perhaps you have to move along a variable rate type of product. I would like to mention something that is pretty obvious, but I think these alternatives come up due to the lack of a strong currency. Excuse me. When you look at different countries in the region, especially Uruguay or Brazil, with a productive matrix that is quite sound and in its more orderly macroeconomy, this is more feasible. Due to the characteristic of the bank I represent, we have a line for dairy products and for other sectors as well. I repeat what Hernán said. You have to be very clear as to the type of products where the payment is related to the commodity. We do not have a high demand for that product. We are being inquired about it, but we are aligned with our colleagues' evaluation. In my view, I agree with what Juan said. We have to understand each one's businesses and see how it correlates to indicators. For example, milk tied with a grape. And sometimes it's not so much the rate, but the project I have to invest in and how much the company will offer. In our case, the relation value products will take a bit more time to mature. We have researched on it, and I agree that it's related to the weakness of our currency. Now it's becoming stronger. And in case they can access funding in dollars, I think that all the alternatives are okay. But precisely this week, I've been looking at reports from the province of Córdoba analyzing the cost of renting farms. And it says that if they could pay in dollars instead of soy, it would have been a lower rent than with a soy equivalent. So it would be best to use the available tools of the system, and perhaps this innovation will not be as productive. Well, the farmer will decide on the product they will pick. Hernán mentioned this. All these questions go against the simplification of processes banks are seeking. we are not prepared for complications. Suppose we have the necessary funds. We cannot do it digitally, which is a demand we are receiving from the sector. To be brief, I think, to summarize, it's good to be present here as representatives of the banking sector because you are requesting simpler versions of our products, and we offer commodities. I think we have to focus on how we provide the experience. We are focused as banks on providing a self-supporting experience and a more efficient experience. And I think we are moving towards a business focused on volume. We see some areas of business that are starting to disappear in banks, so we have to change gears and offer a product that is we offer more analog type of experience, and we are very much focused on a big opportunity on the side of investment. We are investing a lot on this new financial system to provide a more efficient and simpler type of products. And I think digitalization is an ally. We have been talking about efficiency on the side of producers, and now on the side of banks, we are constantly seeking efficiency. The main resource in terms of expenses are human resources. So we need to make processes more efficient. If they're going to be manual products, they are going to be more expensive because they are not scalable. So they need a certain volume to justify the expenses that are entailed. So we are seeking to reach a higher volume of producers, and for that we need to use all the existing digital tools to manage information better. It's important to be able to improve the quality of the credits we offer with more information, improving our communication with the customer. I think last year we talked about the file of a client. Today it's digital information from the customer, and we needed to simplify it more and more. And we need to measure what the producer is producing so as to give the best possible product. Otherwise, we are not going to give them what they need. We need to give the products they need at the moment they need, and in and integrating the different suppliers and provide a better quality credit with less inefficiencies and more innovation. This is what we are focusing on. And I would like to add that from Santander, I don't want to be seen as a credit factory. I want to sit with the different producers and see so that they can see us as a partner to provide a solution. And this is a good platform for investments, payroll platform, etc. We know this is the key when we sit to talk with the customers, with clients, when we talk about credits, but not just to focus on loans, but that we have a great value proposition to improve or to help each of the companies in their processes. Well, regardless of the digital ecosystem, we are focused on the province of Buenos Aires. So, according to the latest census, there are 37,000 agricultural projects, and we are talking about projects of 200 to 500 hectares. We have an approach that is focused on interpersonal relations, to be close to suppliers, close to producers, through the different associations, chambers of commerce, associations, relational work on this regard to be able to advise them and work jointly with producers of province of Buenos Aires. We have smallholders also, but the idea is to be with them. We are present in these 137 municipalities, and there are many places where we are the single bank in that municipality. So if a producer wants to improve, they are quite highly dependent on the support from our bank. So we have a big challenge, and this is more for the private banking sector. We see this business that demands the best of both worlds, the acquisition of products to be digital, but they want us to be close to them, to be present in the location. Having a brick and mortar branch is very expensive. They have to be very efficient. I think we complement with the competition, but it's interesting how we can transform those products tomorrow. I never go to the branch. I don't see my children going to a brick-and-mortar bank, but we have to get ready for what's to come. And what I see as a positive aspect is that we have a very collaborative work. And that we get together with the different banks to share experiences, to do joint actions. Especially last year, we've been dismantling certain regulations because we are seeking for efficient processes, not only to simplify credits for the clients, but for us ourselves. Let me give you a specific example. For everything that is related to smallholders, there's a lot of available information. We do not need the balance sheets, all of that. Sometimes we hide behind regulations, but we have been transforming ourselves. Of course, there's a lot to improve, but there is a lot of information available. I do not know very much, a lot of information from smallholders, just the basic information. So what we have ahead at multi-segment level, SMEs started siding with banks because of the question of offer, which is an interesting part to explore. We are just beginning to implement it, to connect ourselves through an API to a public source of information, and to be able to solve the question of credit in a very simple manner, thanks to the public information. What we are seeing nowadays, probably this will affect you, we will incorporate certain information. Are you going to authorize this information? We are requesting to be joined at the CISA to acquire public information, big data, AI, and we can do it very simply. And this means more credits. And we are doing this with another area that is very well coordinated. We wanted to expand because there are opportunities for all. Let me add something. From the point of view of technology and what you're mentioning, I would like to call it humanized technology, so as not to miss the plus factor of human elements. I think that is present in most banks. There is a specialization in the farming sectors. You won't have many industries to have people on the other side of the counter to be able to understand the farming sector as well as we do. There are teams behind the farming sectors that are specifically thinking of the sector, and to give that specialization is something possible. And you're going to use that in the last mind, because technology has allowed us to provide the producer, to offer the producer to be close to the bank. You don't need to call. You will see it directly in the platform. It's accessible for all. And the supplier will be able to check the platform. So we need to leverage that relation to specialists of the farming sector to go beyond this question of requesting a credit, or to make the most of that relationship and to make the most of that opportunity.
One pending topic for us has to do with sustainability and relationships with banks, and how to make agricultural systems sustainable. So how do banks prepare to enable these more sustainable, these friendlier ecosystems in farming? Well, I think we are part and parcel, right, of this ecosystem. And we want to encourage good agricultural practices. Of course, each bank may have its requirements and its strategy and stuff. We also depend on the market valuing good agricultural practices more. Just to quote one example, we've just signed a partnership with Cortiva so as to grant credits to farmers at a better rate so that they may buy biological inputs. So this is our small contribution so as to reach out to the farmer with a different value proposal. And we also have to value the fact that this ecosystem is tightly interrelated. So this partnership with Cortiva is very useful for us so that we may contribute something to the sustainability framework. I think that it's a change that has come to stay. Now it will become more intensified, and I believe that all the players in the chain need to chip in so as to give greater value to sustainability, or green financing, as we call it. In our case, we don't have much experience along those lines, but what is important to me, because I can see that there are colleagues that have very concrete actions in this regard, is that there should be well-balanced incentives. If there is something that is missing, it will always be on your own initiative. Like, for example, a bank, as a result of its own policy, it may want to say, okay, I want to sustain or support these types of activities. I think that agriculture is part of the solution, not the problem. Farming does things that are already sustainable from the farm's gate inwards. But what we are seeing contextually, it's not the best moment to pose this before governmental agencies. I think that if incentives come up, this will flower in of itself. For example, EPA soybean appeared at one point, and a series of incentives were created that the farmer could capitalize on. If that does not happen, it will not be sustainable over time. So this is in order to be very consistent. Like, for example, with spread compression right now, it's very difficult to differentiate between rates. So if we have incentives to be able to do it, I think that it can be really interesting, so that banks may say, okay, when I finance an activity above and beyond what we are talking about, when we talk about precision agriculture equipment or any efficient process, or adding value to the countryside to make it more sustainable over time, there is investment backing this up, and there is capital for this investment. So I think there is a nice opportunity so that an incentive system may be generated, whereby you may say, okay, I'm incentivized for doing this, but it's not like an incentive of our own. There needs to be a real incentive. So we can put together an incentive system that is well balanced, because we are really adding value. You're adding value in the plot, but we are adding value with financing or with credit. So these conversations are already happening. It will be difficult to materialize during this year, but I think that that's the goal moving forward. It's what Juan is saying exactly. We have these such programs. We have this program with Cortiva, and also starting last year, we started discussions with Bayer and other companies where we are focusing on 2 million hectares for carbon sequestration. And all of these are efforts that we make, and it's a cost. It's not about getting a differential rate. It's a proposal on our side. There is a proposal on the bank side, so as to get to this X amount of specifically measured credits. So, well, we try to make our contribution from the business side, because this is one of the areas where there are more capacities. And we are doing this as an investment, because hopefully tomorrow, when the market values this from the standpoint of differential instruments, because Argentina comes from a highly closed-up market, when you open up to the world, there are different alternatives, and all financing from multilateral companies may be related with green financing or things that may have an impact on sustainability. So I think that it's a good thing to do your homework, because that will give you easier access to the market. And, well, the best thing that can happen to us is to have farmers that are already working on this. Aapresid is engaging in its sustainable agriculture program. Now there's regenerative agriculture, so the more incentives there are, the more initiatives there are, the better. And we need to see this as an ecosystem, not in silos. Of course, we have done like bilateral things with just one customer, but it's very difficult. You need to have lots of companies, with each company contributing as little as possible, because it's the farmer that needs to really put his shoulder to the wheel. So oftentimes we say, when will this have an impact? When this has an impact on profitability, that's a real impact. So for that, there needs to be a market that values this, apart from you being able to improve things empirically for your production. I would like to seize this point to say that the phone number that you see on screen, you can use it. It's +50 493 417 23 0060. Federico has his cell phone in his hand, so you can send your questions over so that the various speakers may provide an answer. As I was reading the questions, let's make this interactive so you can see the phone number on the screen, and there's also a QR code that you can use to drop your questions right there. Thank you. Well, talking about collateral, no, right? How do you collateralize the credit that we grant? Well, that is something that is coming. This is the way credit will be regenerated in Argentina, to get this 20% of loan over GDP rate. With the liquidity that we have nowadays, it's not enough. We need to regenerate it. So clearly enough, the portfolios that have fixed asset-based collaterals and other types of collateral that are starting to grow. And right now, I think that those are good things in order to enable loan regeneration, which is what happens elsewhere in the world. One question which connects sustainability with what Juan and Nico were saying. There are accessories for seeding, for harvesting. These accessories are very expensive. They cost more than $50,000. So they entail a significant investment, and because of their characteristics, they cannot be used as collateral. So are you working on something having to do with this? Right now, you can grant credit on this. It depends on the beneficiary's capability. We have like different tools like for precision agriculture and so on. For example, we have an amount that goes up to $200K. You can take a loan for 24 months. And the goal is to make this a lot more accessible because it's very difficult to classify those machinery, those machines as collateral, because those machines may go on top of another machine that is the object of another collateral and so on. Of course, if this is taken to scale, not everyone will have the capacity to use it. So I need to find ways of guaranteeing a portfolio that has to do with other types of risk, not just credit-related risk. Along the same lines, those amounts do not necessarily need to entail a collateral risk. They always be related to the customer-related risk. There are always means of payment. All banks have means of payment that are appropriate for these kinds of credits. 24, 36 months without having to use a collateral for that. So we need to explore the current instruments which may be used to sustain these types of inventions. Talking about sustainability, maybe talking not about a machine of this value, but there are lines of credit that are granted by public agencies which are making an effort along these lines. These are more limited amounts, but for a farmer that has needs for other types of machinery, these are loans that can be used, but there should be incentives. But I'm sure that there are other lines in the market that are still there. We have lots and lots of questions coming over. So, well, warrants is one thing. What we like about warrants is that the process is becoming more digitized, and this reduces the cost of collateral, and probably we will find farmers that are more eager to grant or to issue a warrant in order for banks to be able to lend with collateral, and not just for grains. Like, for example, there's also the livestock raising warrant. Argentina has around 150 million heads of cattle, and this might be measured as $40 billion. This can be collateralized, of course, with its caveats, of course, and the same applies to grain. We are used to driving along the highway, and we can see those silo bags that are filled with stock, and maybe that stock is an opportunity. Instead of sitting on it and assuming the cost of, or taking on the cost of leaving it right there, well, it may be used as collateral and so on. Well, there are things that are coming up on a daily basis in the market, and we should take advantage of the stock that we have so that the banks may be able to improve capital consumption, broaden their credit lines, and do business, because that's what banks exist for, doing business. And also, the warrant is a self-settable collateral. It's a collateral that can be auto-settled or self-settled. So this might lead to a reduction of the rate, depending on the quality of the warrant or the guarantee. So imagine small farmers, costs are very high. Warrants as a working capital financing tool, or can we also think about a long-term warrant? Both, because this also got deregulated. So what you're actually looking for is being able to monetize, that is to say, giving value to idle assets. And when you talk about livestock, there have already been livestock warrants that have been used, which help you to finance capital goods in the longer term. That is to say, how do I finance small implements in a dairy farm? Well, you have your livestock, so you can use your livestock as a warrant, and you can use that to get money for a loan so as to complete your dairy farm, so that you can use, buy all the inputs that you require, like instruments and collars and so on for the cows and so on. And this will allow you to have better traceability for your heads of cattle. So this will reduce costs for the warrant as well, and it will make it more affordable. What about leasing? Lots of questions. We understand the nature of leasing and how this can impact the balance sheet. I think that we've experienced is I see the same reality in the bank that I'm in right now. Leasing has a very creative process. All of these frictions that we generate through a product that does not have a simple, digitized, self-managed cycle, that is where we have the frictions with our customers. That's what we are trying to avoid, because if a customer leaves the bank, he will rarely return. So, like, for example, the same applies to insurance, like goods that go out into the highway and so on. Like, for example, for those dealing with leasing, you're probably familiar with that. Like, for example, we would insure a tractor, and the very same farmer got half the cost with an insurer that was just around the corner. So that is one experience that we had with leasing. I think that's a good product for growth. It has a lot of potential, but I think it requires a couple turns of screws so that we make it more simple. In our case, we decided to work more on fixed asset collateral. So in the case of Santander, we used to be a company, Santander Consumer, that focuses on providing a good experience for the customer. So this is based a little bit on what Juan was saying. Another question, what do you recommend vis-a-vis rates, terms, currency for the next campaign? The toughest question was the very last one. So you have 6 minutes to provide an answer. Well, this was mentioned by Nicolás before. I think that the credit needs to be available, because when we rush to get a loan, we sometimes make poor decisions. So in pretty much the same way as we plan different aspects of the campaign, such as seeding, we need to plan for input credit ratio as well. Argentina is a surprising country. It always will be. If we wait to take loans just because of the rate, I don't think that's the right decision to make right now. Nowadays, credit or loans are being given in dollars mostly, and I do not see a correction because the rate available is the rate that there is, and we need to think that the rate will be positive. In the past, it was more convenient to become indebted because the rates were negative, but right now, the rates will always be positive, okay? Now, taking a loan in pesos involves high rates if you apply that to your own business, but these are strategies on each company's side. It is true that right now the market is highly volatile, and I do not see this changing up until October. So you need to think about what loans you want to take, in what currency. You need to do your math and make the right decision carefully. I do not see a big change in the short term. Hopefully, And considering that the rate will always be positive, nominal values might go down, but next year, probably.
One question that is quite unsettling is related to the elimination of the dollar constraint, and it's do you think that exchange rate is close to the final exchange rate, or there could be further adjustments with a possible prospect for fixed or stable credits? This is the other side of the question with reference to rates. It is difficult to answer this question. I do not have such a clear idea. It seems that fares are where you buy the machineries is where we expect the financial conditions to offer the best products. I think that the price went down. They will continue going down depending on the supply and demand. Machinery fleet has changed a lot, taking the opportunity of credits, and this brought about an over-demand. Now we should see what will happen with prices, but I do not have a clear horizon. I think that prices of machineries got adjusted, especially in the international sector. Prices here are sometimes tied to market questions. Today we see import offers, machinery offers, and this brings an impact on the market. The reality is that this is a question that on the side of banks we limit ourselves to put up a financing offer. We do not analyze so much in terms of prices on the part of the industry. We are always trying to help with financing tools to help farmers when they need to renew their fleets. And as long as the macroeconomy continues on this way, factories will continue taking the same decisions as to the offer of their products. When we talk with suppliers, prices went down. They are making an effort. Now, if there is a margin for them to drop prices more, it's a question of supply and demand. In general, when you see what happened during the last harvest, the product in terms of technological package and fuel was more expensive than expected. When the producer with low margins go buy machinery, they expect machines to go down. So it will all depend with the agreements we are able to sign with the different suppliers. As we mentioned before, there are opportunities that we will see. One of the opportunities that we saw is the imported second-hand machinery. And this is something that appeared. We are funding second-hand machinery, and that is good news. Let's hear it for this magnificent panel.